I'm going to ask the panelists today to quickly introduce themselves. And also, guys, if you have picked up any issues, either from Nikolai's presentation earlier or from your discussion over the last 15 minutes or so, please let them have them now, and then we'll pick up some questions and comments from the floor. Nikolai, I think we know you, so let's start at the other end. Adam.
Morning all. I'm Adam Vaziri from Diacle. We specialise in emerging technologies and regulation. So I was just walking around gauging people's opinions in respect, the angle that they're coming at with Bitcoin. And some of the interesting points that came up from the businesses operating in the sector, in the payment sector, was that they are not going to move forwards with developing any product, for example, prepaid card, whatever, that has a Bitcoin element to it, until the regulatory landscape has been clarified. So there's interest, but there needs some clarification before people move forwards. Another interesting point that came up was PSPs who are already dealing with Bitcoin businesses. The way that they deal with these businesses is via enhanced due diligence. So they're not really, they're interested in the activities, but they want to know who is behind this. So they're conducting enhanced due diligence on the people involved in the businesses. So these are, if you want, the people who are happy to proceed with working with Bitcoin businesses in spite of there not being so much clarity from a regulatory standpoint. So I just thought I'd bring up those 2 points to start with.
Thanks, Adam.
Hello, thank you for inviting me here today. My name is Simon Dixon. I'm co-founder of an equity crowdfunding platform called banktothefuture.com. I also wrote a book called Bank to the Future a while ago and was mentioning these strange things called bitcoins and crowdfunding in obscure terms back then, which was an interesting to see the developments. I came from a traditional investment banking background, and now we're currently incubating businesses in the Bitcoin cryptocurrency and alternative finance area to raise finance through equity crowdfunding. For those of you not familiar with equity crowdfunding, it's like an online dragon's den where the dragons don't need to be rich and anyone can participate and they can get significant tax relief by investing in companies. So that's my involvement at the moment. We're currently working with 10 businesses. One of them next to me, Dimitri, CryptoPay. He'll tell you about what he's doing, but we've got point-of-sale terminals, we've got Bitcoin ATMs, we've got lots of different financial innovation that's going to hit London this year, should they get funded through equity crowdfunding at the moment. The point, I guess, that I'd like to start with is that right now we have a very depressed economy at the moment, but within the Bitcoin area, it's completely booming and it's completely buzzing. The Bitcoin businesses are employing very fast at the moment. Venture capitalists all around the world are trying to put money into Bitcoin-related businesses. There's a very buoyant, growing community. For the last 3 months, I haven't been paid in anything but Bitcoin for my wages. It's completely counter to what's happening in the real economy at the moment. So it's a very interesting space to be around.
Hi, my name is Dimitri. I'm a co-founder of CryptoPay. We're doing payment gateway for Bitcoins, and we are really focusing on the merchant side of this stuff, because we do think that at the moment, all this infrastructure, like payments and shopping infrastructure, is more focusing on the customers, but not on the merchants. So the merchants are the guys who's paying these fees for this convenience that it is. And we do think that Bitcoins can bring lots of benefits for these merchants because they eliminate chargebacks, they make international transfers really fast and convenient, and well, there are lots of benefits about the Bitcoins in the merchant side. Thank you.
Hi, I'm Hakim, and I'm the co-founder and CTO of Seedcoin. Seedcoin is an incubator that works with cryptocurrency startups around the world. We're incubating also companies from various countries, such as CryptoPay here in the UK as well. We're incubating exchanges, wallets. We're incubating trading platforms. My background is in IT and finance. I used to work in a city in London for many years. And what I would like to bring to your attention is on a macroeconomic level. I don't know how many of you guys here, maybe I can have a show of hands, how many of you guys know that in Switzerland they've had a complementary currency for now several decades? Anyone of you have heard of the VER currency? Okay, a couple of people, right? Now, what's interesting with the currency in Switzerland, a complementary currency that lives side by side with the Swiss franc, what we've had after a few decades of statistical data is the ability to realize that when you have such a complementary system, a complementary monetary system, what happens in terms of macroeconomy is that it acts as a shock absorber. So the Swiss have done very well for themselves. They've got a very strong economy, and the presence of this alternative currency that sits side by side with the Swiss franc is enabling them to absorb shocks on a macroeconomic level. Now, we have the ability to use Bitcoin in the same manner. We've had strings and strings of boom and bust cycles in the world, and maybe it's time for everyone around the world to be able to absorb those shocks by having a complementary currency such as Bitcoin. So I think that's worth considering. The other point that I would like to bring, and I don't know if anyone here is from the regulatory side, but if you look at the new technologies that are coming online using cryptography, we're coming to a place where very soon we will have new form of exchanges where there is no need for trust between the customers and the person running the exchanges. Exchanges where people who have contracts with one another. Imagine, for example, a commodity exchange, a commodity future exchange, where you would be trading futures for commodities with people, and you'll be able, in the event where the exchange collapses, in the event where the management is not doing a very good job and they're going bankrupt, you'll be able to move your contracts from this exchange to another exchange without losing any money. This is a type of advancement that cryptography is going to enable us to do very, very soon. There's already companies working on this. The Open Transaction open source project is one of those examples. So imagine, as far as consumer protection, we are able today to start delivering brand new ways of doing businesses where you can protect customers much better than it's ever done before. Thank you.
Yeah, Hakim. Popular comment, Hakim. Nikolai, anything that you picked up from the discussion?
From the comments that I heard of, yeah, so indeed, complementary currencies might have some macroeconomic impact, but the idea there comes from the fact that having a competing currency somehow has a responsibilizing effect on the producer of the official paper currency. Now, to come back to the Swiss example, this somehow did not work out very well because even the Swiss central bank had to, at the end, to peg the Swiss krona to the euro because of these big monetary inflows that they had, serving as a security haven. So despite this local complementary currency, the Swiss central bank had to follow the same inflationary path as the European Central Bank. So I am not fully certain that Switzerland is a very good example, but I fully agree that the cryptographic byproduct coming from Bitcoin seems to be something in the future. Now I had a question for those who say that in Bitcoins allow for quick ownership transfers, convenient at very low cost. Now, there is a big risk attached to this, because at least for 10 minutes I am a holder of Bitcoins. I must sell my property, buy Bitcoins, park the property basically into Bitcoins, and then at a future point in time, transfer the Bitcoins into something else, another asset. So for a moment, I'm a holder of Bitcoins. Why don't we see the development of derivative markets in Bitcoins? Because we have a big issue with what will be the future price of the Bitcoins. Maybe I will lose 20%, 30%. Maybe you said you were paid in Bitcoins. For you, it would have been very convenient, actually, to have a derivative market that would fix you the value. Why don't we see the emergence of a derivative market?
No, he's coming.
The answer is that's already been built. It's just not well known yet, and so derivatives are essential. And if anyone's familiar with my work, I've always been very negative about the speculative side of the economy, and I've always been discussing about how you need to get more money into the productive side of the economy away from the speculative side of the economy. But the difference with derivatives built upon the protocol is that they're built upon a sound, unriggable, transparent system, which completely changes them, and you can have then all the benefits of derivatives in terms of their effect to de-risk and stabilize the volatility. But this time round, derivatives can be done properly without the centralized rigging that can occur through the traditional ways. But you're completely right, derivatives are here. Every single financial product is being reinvented into a transparent, open source financial product as we speak.
And an interesting point to note here is that it's being done without any regulation. And that, consequently, has consumer protection issues surrounding it. And the biggest example today is surrounding Mt. Gox, which probably you've seen in the news. This is an exchange receiving customer monies and client monies, effectively, and operating an intermediary matching order system, which under normal terms, if they were selling derivatives or operating a commodities exchange, they would be recognized by the FCA to do so and audited in order to be able to provide that service. If they were a lighter version, say, of the London Stock Exchange, they would be what is known a multilateral trading facility, and in order to operate that, you need authorization from the FCA. All of this is off the radar. And when you look at the consumer protection issue, potentially $300 million has gone missing via theft over a 5-year period, unbeknown to the owners of Mt. Gox. They just woke up one day and said, oh, look at my cold storage wallet, there's nothing there. Bankrupt overnight. That would be unacceptable in any, established jurisdiction to allow that to happen. In Japan, they're turning the other way.
Can I jump in?
Hold on 1 second. The point is, regulation is the next step in order to bring this to its full potential. And the way that you do that is through, and I've set it out in the white paper if you want to read it, that's in the handouts. There's 2 ways of doing it. Either you recognize it today as a commodity or currency, which immediately brings in any derivative-based exchange, etc., within the remit. It means operating an exchange becomes an authorized activity, which means you need to obtain a license. Or, which is probably the preferable way, is you recognize exchanges themselves, which are probably the most important bit of infrastructure in the ecosystem today, as a payment institution, and you fit them in PSD. Sorry, Hakeem.
Hakeem, just before you start, can I just introduce Constance Choi, who I'm going to get up on the stage because she's run here, and is just about out of date, out of breath. Constance, there's your mic. Would you just literally give us a sentence as to who you are?
Sure, and my apologies for being a little late today, running. So my name is Constance. I'm the general counsel of Payword, which is the company behind the Kraken exchange. We're actually the largest euro exchange in the world right now, and we're rapidly growing. We launched last fall after 2.5 years of development. So this was several years of a skilled team of engineers building out an institutional grade system. So we've launched, we've been very successful. We've been focused on doing things in a very legally compliant way. We've been leading leadership initiatives, including data. So the other hat that I wear is as the Secretariat of Data, which is the Digital Asset Transfer Authority, the self-regulatory organization for digital currency firms. And this organization was formed last year because we recognized that there was a deep disconnect between what the serious businesses in this industry were doing and what you were hearing about in the news and what was becoming an echo chamber in the public press. So you were kind of just hearing the sensationalized news and the illicit, the alleged illicit uses, and then, and then you had serious businesses that were actually bringing important products to market for consumers. So data was formed to answer that vacuum of how these digital assets, which really defy a lot of asset classes that we've traditionally defined, how do we define that now in the interim before regulations are fully formed, and to engage in an ongoing dialogue with regulators to ensure that public policy concerns are met.
Constance, thank you. Thank you. Hakeem, can we pick up your comment and then we'll pick up some comments from the floor?
Right, yes, absolutely. Now, indeed, what happened with Mt. Gox was a terrible thing. But, you say Mt. Gox, I say MF Global. MF Global was a regulated entity in the US. They failed miserably. They took down customers' accounts. And that, even though they were regulated, the problem was not avoided, in a sense. Now, imagine if MF Global was, again, an entity that used cryptographic trusts and was therefore unable to take the customer's money away from the segregated accounts. The same thing should have happened for Mt. Gox, but the technologies that I'm describing, the trustless exchanges technologies, open transaction started in 2010, I believe, so this is quite new. But indeed, regulation can be something that can be brought forward, but I believe that even better than regulation is to ensure that by design, there is no way for an exchange or a brokering house to be able to actually run away with the money of the customers by design using cryptography. And then, if you want to regulate on top of that, I think it would be an even easier job if exchanges use this kind of trustless model.
Yeah, transparency makes regulations very easy. And the Bitcoin protocol makes transparency very easy.
Okay. Can I pick up some questions, please, or comments from the floor? Table 8, please.
May I first of all thank Nikolai for his in-depth explanation, but perhaps ask him to, first of all, it's a two-part question here, first of all to expand on the point he made about lack of control by holders of cryptocurrencies. Perhaps maybe comparing with the level of control that Cypriots had in about a year ago over their fiat money that was lost in a systemic failure. And maybe I'll ask the second question afterwards.
Okay, thank you.
That's a very good question. And the comparison fully stands because these are virtual media of exchange. That's precisely what I said. The deposits at the Cypriot banks are virtual money substitutes, exactly in the same way in which Bitcoin is a virtual base money. So the problem which you are referring to in Cyprus is another one fundamentally, it's that of fractional reserve banks. So it's another issue in economics. Fractional reserve banks multiply base money and create more titles on base money than they have in their vaults. Now, this is something that also theoretically could happen with Bitcoins as base money. Nothing prevents entrepreneurs on the market nowadays to start banking activity with deposits into Bitcoins. So fiduciary media of exchange redeemable in Bitcoins are also possible. And then we are back to the business cycles that you mentioned with an increase in money supply in general and so on. Now, that's what I meant. But my point on lack of control is that you do not control a Bitcoin wallet in the same way in which you control a Krugerrand coin. The Krugerrand coin has a physical material. It is in my pocket. I am the owner. It could be stolen indeed, exactly in the same way in which Bitcoins might be stolen, we'll learn. But the money is there. The Bitcoins need complementary factors of production, exactly like with the current deposits. You need electricity, you need softwares, you need people to develop the code, you need miners, and so on and so forth. You see, there's a fundamental difference there. One, a silver and gold or any other commodity coin is there. The owner of that coin has the full control of the coin. This is not the case with a wallet of Bitcoins, quite obviously.
Comments from the rest of the panel?
Yeah, I'd like to jump in. I mean, since 1971, we haven't been under any gold standard, so I don't know why you're referring to gold coins, because everyone is using, fiat money, and we're relying on an international payment system such as the SWIFT system that also relies on computers and electricities and all these things. So, the comparison trying to say that, the gold coins are better than Bitcoins, for sure, certainly, but no one is really, who's got gold coins in their pockets today? Okay, one person. All right, two people. But at the end of the day, people who are using pounds are relying on electricity as well for their SWIFT system or whatever systems they're using.
You are perfectly right, but remember that this was an anti-establishment project.
Not necessarily.
Originally, and this is, believe me, the whole purpose of the whole thing. Let's get an alternative, and in terms of alternatives, we must think of the tail event.
It's a complementary system, right? Remember, in Satoshi Nakamoto, in the Genesis block, inscribed some information. The information was about the bailouts of the bank and how it's unacceptable when you live in a capitalistic society to have banks that are allowed to be bailed out. Now, a complementary system, a complementary monetary system will enable people to divest away from the too big to fail and make them small enough to fail. And basically, that's what we need in society.
Yeah, well,
I would agree.
as we speak, we kind of have the perfect case study of the difference between Bitcoin and banks. So there's three fundamental principles that are bestowed upon anybody that has a banking license. The first is when you have a banking license, when people deposit their money with a bank, they become the legal owners of the money, of your deposit. The second is that when they become the legal owners of your deposit, they get to allocate it as they wish through where they issue loans. So they spend your money as they wish, which is normally done through the profit-seeking and risk goals and the appetite for risk for banks. So in the UK, for example, take Lloyds Bank, 40% goes to pushing up property prices and mortgages, which is unproductive, inflationary redistribution of wealth from people who have assets to people that don't. 40% goes to financial speculation, and only 13% goes to the productive side of the economy, which is job creation, SMEs, which produce about 60% of our jobs in the UK. So the allocation that banks use is not an efficient way of running an economy. The third thing is that banks have a license to create money, as we've talked about already. And you talk about a multiplier effect, but we have no multiplier effect in the UK. It's literally the money is created based upon the appetite to lend of banks. That's it. There is no base or anything like that in the UK. That went a long time ago. All studies of the multiplier effect in the UK have completely disappeared. So those are the three things. And because of those three principles, you have banks having a massive influence over our economy and essentially are deciding and dictating where money goes based upon their appetite. And secondly, you have massive systemic risk. Anybody that says you could have let a bank go bust doesn't quite understand the systemic risk involved in that, because at the moment, without an alternative, you cannot let a bank go bust. And it's the rational thing to do to protect a bank in order to uphold that. As much as I'd hate that to happen, it's because of a lack of alternative at the moment. So what we saw with Lehman's is a systemic risk. What we saw with Mt. Gox is that there isn't a systemic risk because there aren't those three principles. Mt. Gox was allowed to go bust. We should have had extra technological cryptographic procedures within that company in order to make sure that client money could not be stolen. But it wasn't systemic. Mt. Gox is going down, whatever it is, on its own. And the Bitcoin community there's not been other companies affect other than the people that have lost their Bitcoins, which brings up a new challenge which needs to be solved.
Can I sorry, just want to mention that without Mt. Gox is receiving client monies, it has a privilege that other regulated entities do not have, in the sense that they do not need to have their client monies audited. They do not need to comply with CAS rules to protect those funds. And that, unfortunately, has puts Bitcoin in a bit of a fragile position. Even though you can develop technical things, how many more Mt. Goxes do we need until they are developed and implemented across the board? That's why the intervention of regulation allows for similar rules to be applied to these new businesses, which should encourage further innovation and bring Bitcoin into the mainstream. And then when it comes into the mainstream, then you have what banks, the fourth principle that banks have is the deposit guarantee, which is backed up by the government. If you bring Bitcoin into the mainstream, regulated, then potentially that principle of deposit protection will extend across to Bitcoin.
So you don't need it because it's full reserve.
Yes, but what I'm saying is that if you bring something into regulation, into the mainstream, then you also bring in the responsibility of government to endorse and sanction and protect it.
I just want to jump in here a little bit about the regulations. Mt. Gox is absolutely regulated in many countries. So if Mt. Gox is servicing customers in the United States, they're subject to the Bank Secrecy Act and required to register with FinCEN as an MSB just like any other money transfer business. So, what Japan does in terms of defining Bitcoin, not defining at this point whether Bitcoin is a commodity, currency, or other kind of asset, is that they've left it in a gray area. It is not so much of a gray area in other countries. And the answer of what Bitcoin is in the meaning of the laws of certain jurisdictions is a different answer depending on which jurisdiction you go to. It's very complicated, and it takes a lot of investment for these entrepreneurs to enlist teams of lawyers to go around and make sure and get clarification, go to the regulators, explain what the technology is, get clarification as to what the meaning of the existing laws are as applied to this new technology, and then entering into that dialogue to develop new regulations if necessary, or to adapt existing regulations if necessary to address very real public policy concerns. I was at a closed-door meeting with some big investors in the Bitcoin space in New York just a couple of weeks ago, and somebody brought up a really good point, which was, could you, and this is something, just by way of background, I've been a technology lawyer working on these kind of cutting edge issues of law and technology for quite some time, and I've seen both the failures and triumphs of the slow pace of law as it is adapted to new technologies, particularly in file sharing contexts and others. So, what this gentleman raised in the meeting was, we need to be careful. Could you imagine when the motor vehicle was invented, if we had such a failure of imagination that we capped the ultimate speed of a motor vehicle at the ultimate number of horses that we could imagine, a human being going. So I think that I completely agree that we need oversight. These businesses. And I should mention that these businesses, even though they are not technically, under the purview of a particular regulator or not, depending on what country you're in, have effective AML programs, have effective transaction monitoring controls. They KYC their customers, and they have capitalization. They have regular audits. So these are things that companies are already doing proactively in anticipation of regulations either coming or being interpreted, now, years after the technology has been developed, to apply to these technologies. So, the issue is that it takes time to suss through these issues. And it's a bit of an education process. On behalf of Payword and on behalf of Data, I've gone around speaking with public and private stakeholders all around the world. And there are varying levels of sophistication. Even in the UK, I know as recently as last year, they were showing news channels describing the Bitcoin technology in a completely inaccurate way. So reactionary regulation will stifle innovation. Reactionary innovation will result in absurd laws. So right now you have a Bitcoin, which is incredible. It has incredible potential. The ecosystem is very fragile. The meaning of the laws as applied to these technologies is still yet to be answered. But we know that it has potential, and we certainly can engage with the businesses and with the regulators to make sure that there is proper oversight, that there are regular audits, that these firms are well capitalized, that there are mechanisms in place to ensure the sanctity of customer funds.
Just a quick point. You do not need to create specific regulations to encompass Bitcoin. It's not a matter of adding new regulations, it's just a question of interpretation. If the FCA tomorrow decide that exchanges are money remittance businesses, then they will be regulated. We'll need to, at a domestic level, need to retain 25,000 capital, liquid capital on the side. If tomorrow they decide it's a commodity or currency, people doing derivatives in Bitcoin will need to register as an MTF. So everything is there. It's not a question of developing new laws.
Now the problem is, of course, just one last thing. The problem is that Bitcoin can act very much like a commodity, and it can act very much like a currency. The fact that you can have an instantaneous secure payment instantly around the world, that makes it very useful as a currency. The fact that this is immune to inflation, that no one can counterfeit this money or create more, makes it incredibly valuable as a store of value. So it has attributes, it's kind of a super asset in that it has attributes of these various asset classes that we've defined. And I think that, I completely agree that existing rules around, fiduciary duties, fraud, customer deposits, these things can be adapted to these technologies. But I caution regulators to ensure that they really understand the technology and have a light touch so that they can anticipate the ways in which this technology will evolve and make sure they don't put it in a bucket that will create really absurd results down the road.
Nikolai, do you want to have the last word on this?
Yeah,
and we'll pick up
pick
up another hand grenade
yes,
from
my side on the link between the Bitcoin and banking, because it's very important. Now, you presume that Bitcoins imply 100% reserve banking. That's not necessarily the case. So you made a very good point that nowadays fractional reserve banking is legal. We are not the owners of our deposits, the bank is, and so on. That was not the case historically. Historically, in the Middle Ages, fractional reserve banking was completely illegal. The banks who were having fractional reserve banks got their bench in the public space rotten, destroyed. That's where we got the word bankrut, bancarotta from Italian. And those who were found in the operation of fractional reserve banking actually were decapitated. There was capital punishment for fractional reserve banking. And it took 4 or 5 centuries until some last processes, legal cases were solved by the court of Paris at the beginning of the 20th century, when fractional reserve banking eventually was fully legalized. Now, what would prevent nowadays a bank starting some fractional reserve activity with Bitcoins? You have a point that is very difficult with the current legal system to bail out such a bank, because the total supply of base money is given. You cannot create Bitcoins in the way you can create euros and dollars. It's easy nowadays to bail out a bank because just the central bank provides some liquidity. With Bitcoins, in principle, and according to the current rules, you cannot do this. This indeed would limit very much the activity of fractional reserve Bitcoin banking. But what if the rules are changed by the emerging majority? We know that the mining capacity is getting more and more concentrated. We don't know what coalitions will emerge in the future. It might be that the rules are changed. So we don't know. And who knows what happened exactly with empty GOCs? Maybe there was some fractional reserve activity behind if they were not able to pay with the existing reserves. And actually, this is what one should logically suppose. You have an exchange that cannot pay back, exactly like the Amsterdam Bank in the 17th century. Supposedly 100% reserves. Supposedly everything is in the vaults. And when the depositors come to take the money, there is nothing in the vaults. Exactly the empty GOCs case. So I'm a little bit suspicious there also.
I suspect there's some more fireworks still in the box. Would someone else like to light a fuse? I saw that hand at the back first there. Yeah. Yes, sir.
So touching on that point of funds going missing and problems of fractional reserves, whether intended or not intended, if on an audit of Mt. Gox, they could be shown to be stolen Bitcoins and there were transaction IDs that could be identified, how would each of you feel about a new version of the protocol that miners adopted, Bitcoin bailout, that reversed that transaction? Would that create a moral hazard, or is that just part of the democratic movement of Bitcoin that we should embrace, that people can take it where they want and undo criminal theft.
Who'd like to pick that up?
That is a grenade, is it? Thanks.
I think fundamentally it's a decentralized system, and therefore if you determine that something is criminal, you need someone to say and a judge to come down on. So there's always going to be some debate at an international level, whether Japan, for example, a judge determines that that was criminal activity and it was theft, then would that be the criteria to reverse those transactions? It's debatable how you would enable that in practice. Well, at their discretion.
That does bring up a very interesting point as well, is that the protocol allows for decentralized consensus for something like that to actually exist without the central authority having to actually say. So that decision could actually been taken to decentralize consensus through the protocol. And you wouldn't actually, that decision could be reached out. But you know, you gotta liken it to, you know, if a Ponzi scheme exists, what is the process for compensating the people that were involved in that Ponzi scheme? It also brings up an interesting point that the major difference between banks and Bitcoin is that with banks, banks accept a lot of the responsibility for security of your deposits. With Bitcoin, anyone that engages in Bitcoin needs to learn how to secure their own Bitcoins. And anyone with a bit of education would not have left their Bitcoins in Mt. Gox, and it wouldn't have happened to them. But it brings up an interesting point that we are putting responsibility on the Bitcoin owners to actually know how to treat their own assets as well.
I think that the whole Bitcoin protocol and the community around it is centered on, you know, just fundamentally opposed to that kind of manipulation, and actually was created in an effort to address some of the abuses of such a system. So, you know, I actually, you know, Mt. Gox's problems were well publicized and pretty well known for years. You know, they suspended withdrawals, they had multiple DDoS attacks. I mean, it was really, if the allegations are true, and from, you know, what we know, you know, it was a very poorly run company for many, many years. There's one guy in an office in Tokyo, and it just wasn't able, it was a system that was not meant to scale to hold $300 million of customer deposits. So, you know, I think it's extraordinary that, well, first, there's actually been so there was a developer a few years ago that tried to create a fork in the Bitcoin, and what did the miners do? The miners ignored it, and they you know, forked off another way. So there is an ability of the community to mobilize against attempts to, you know, manipulate or change the protocol in a way that that fundamentally undercuts, you know, what the protocol was designed to do. You know, I think that and largely, you know, the response over Mt. Gox, if you compare it to the banks, I don't know any other industry in which, if there was one bad actor in the industry, where all the other industry players would come together and offer to have an independently verified audit to ensure that their customer funds are on hold, just to ensure the public trust in the system. So not only to say that they are following the rules, but then to open up their books to ensure that people can trust the business practices of the exchanges in the space. So I think that really speaks to how responsible and responsive these companies are, and how much they are willing to work with regulators and to address concerns so that they can actually allow these innovations to take root in the market.
Okay.
I'd like to add, you know, the Bitcoin protocol is a strong protocol. Rather than changing the way it works and allowing for those reversal of transactions, I would rather see serious professional exchanging, again, implementing trustless servers where there is no risk of such actions taking place in the future. That would be a lot better than trying to reverse transactions on the protocol. If those exchanges come online, then they will be the ones that are adopted by the public, because they will understand that their Bitcoins or their funds are a lot safer than with what Mt. Gox did. Now, let's remember that Mt. Gox initially started as a site where people traded cards for games for kids, and then later on turned into Bitcoin. Now, I would like to point out that through my work at Seedcoin, we talk to people around the world who are working on projects around Bitcoin. And I can tell you that there's been a new wave of entrepreneurs coming from the banking industry. Guys who've been working on the trading floors, developing trading systems for very big banks, and those guys are now developing the new generation of exchanges, and they know what they're doing. It's not what we've seen with Mt. Gox, someone doing trading cars and then turning into Bitcoin. We're talking about people who know how to create, resilient, strong exchanges, and those exchanges are going to come online, and they're going to be a lot more serious.
I mean, just imagine like multi-signature wallets in which escrow or arbitration funds can be held, and upon a condition occurring, those funds being signed by multiple signatures and being released automatically. There's lots of products.
So, sorry, and Mt. Gox, I think this is a really important point. Although poor customers who have lost their money, but the new generation of exchanges is happening in any event, but this will galvanize that movement. People who want to set up exchanges are going to be doing it seriously now. There's no more kind of like tech guy, 14 years old, in his backyard in Singapore. This is much more established. There's the VC money, and there's the infrastructure and the human capital now to create proper exchanges.
Crowdfunded money.
Crowdfunded, of course.
Let me just pick up a few more questions from the floor. John, and then the lady over there, and then we'll come back over here.
I have a comment and a question. My comment being FX spot is not currently being regulated, right? Gold spot is currently not being regulated. I can't see that something will be regulated because it has the word coin in it. So that's my comment. Simon, this question is for you. Do you agree with the previous comments that derivative contracts, Bitcoins, fall outside FCA regulation?
I'm not a regs expert. I'd probably hand that over to Adam. At the moment, I think everything to do with Bitcoin tends to be hitting outside the regulatory framework, and we're doing self-regulation at the moment and making sure we completely comply with everything that we know it will look like once it is regulated. But yeah, we're looking for just as much clarity as you are from the regulators, so we're asking for that right now. Adam, you got any comments on that?
Yeah, just to answer first to answer your comment, FX spot, yes, is not regulated in the UK. Gold bullion is not regulated in the UK. However, in Guernsey, as you well know, gold bullion is regulated, and if you took, let's say, gold in the UK per se is not regulated. However, there's a voluntary code which gold bullion sellers adhere to. Okay, so, but anything layered on top of those commodities, commodity is gold or currencies, FX, is regulated. So your comment about derivatives, I put it to you that if you consider Bitcoin to be a commodity or currency, which the FCA has said that it's neither. However, interesting enough, the FCA yesterday mentioned that it was a commodity, but that's probably an unofficial stance. At the moment, officially, it's neither. Therefore, derivatives, you can trade in them. That's fundamentally the position at the moment.
I hear you, but I still believe that it's regulated as a derivative, or I would take that stance. But I hear you, they didn't say it is a commodity or a...
But a derivative is based on something.
So are you speaking of contract for difference in the UK?
Yeah.
Yes, it's my belief it is regulated. Even if there's no delivery of a physical object, regardless of whether what asset class you've put that in, that contract for difference on top of that, I think would put it under the purview of regulations.
Okay, thank you.
Okay. Lady here, let's move. We're going to run for another 5 minutes, so I'd like to pick up another couple of questions.
You answered to my question because it was with derivative. I will sum up and ask a question for Nikolai. What can be done at the European level to regulate, because the SEC and CFTC are considering to regulate Bitcoin. So what can be done at the European level?
I'm not a lawyer, and I absolutely do not work with regulations. I'm just an economist. I try to make a few distinctions. so that we can better understand what you're talking about. As far as I'm concerned, I think there is already a very big amount of regulation existing there, and this is legal tender. And it's precisely because of legal tender, for instance, that bitcoins, according to the current legislation, cannot be recognized as e-money, for instance. Because is recognized as e-money something which is already declared a currency. What is declared a currency? Basically, these are the legal tender media of exchange. So this is how far I can go. Maybe other people are much better experts on regulation.
We've done regs to death, I think.
It doesn't work. So, yeah, I meant that some economists think that a Bitcoin derivative market is necessary to stabilize the rate of the Bitcoin and the volatility. So, do you agree?
This is what I would think, yes, because derivatives and speculation in general has the function to stabilize the tendency of prices over time. So I would strongly encourage actually speculative activity in bitcoins if the goal is to stabilize the exchange rate of bitcoins relative to other currencies. Yes.
So I also agree with the derivatives comment. In the United States, entering that kind of market would require CFTC registration, which requires at a minimum $20 million in capitalization. So that's a large barrier to entry for a lot of entrepreneurs that, simply need to put their product out on market to test the controls as well. That the risk of the failure of that product is, doesn't require $20 million. So the question is, you have these very large, burdensome frameworks that are designed around very large institutions like banks and broker-dealers. So how do you adapt that to entrepreneurs and startups and wallets and in these incubators in developing countries? How do you allow these innovations to be brought to market safely and under regulation without running into these kinds of barriers to entry, which would really strangle those innovations?
And remember the case of Intrade. Intrade was a platform for betting, so to speak, on contingent future events. For whatever reason, indeed, in the US, the regulators are extremely sensitive to anything which has the aspect of a derivative contract. And probably the reason is that derivatives have a bigger influence on the prices of shares, of securities, of the dollar exchange rate. So anything that has to do with derivative activity, and Intrade basically was shut down as a website. Indeed, I confirm that anything that has to do something with derivative contracts, even though it's economically extremely useful, has a big regulatory barrier nowadays.
Just to talk quickly about the volatility in the price of Bitcoin, let's remember that it's an emerging market still. So, what we're looking at is price discovery, people trying to understand what the value of Bitcoin is. And every time that a new group of people become aware of Bitcoin, they start to want to buy them, and because of, there are not many exchanges, there are not many players, of course the price can swing quite dramatically. Now, as the market matures, regardless of the existence of derivatives or not, we will see a stabilization. I don't know how long that's going to take, because as you may know, at the moment there's only a very small amount of people around the world who know about Bitcoin. But as this number grows, eventually we will see a stabilization of the price.
Do you think that people are hoarding?
Probably. But I call that saving, though.
Yeah. So just if you look at the price of oil, as industrialization was happening and the ecosystem was growing, I think it's a pretty good metaphor. It was still unknown, what the value of this would be, and so there were wild price fluctuations over time. And as that ecosystem built out, it was easier for people and participants in the market to price that risk. And so, the part of the problem with Bitcoin and the beauty of Bitcoin is that it has so many utilities. And so, some people are using it as a transaction method. Some people are using it as a store of value. So, and these things are causing the price to go up. So as the ecosystem grows out, more people are using it, there's more of a network effect, there will eventually be a transaction value to Bitcoin. And Bitcoin can be divisible up to 8 decimal points. So that is, I think, 100 trillion units, or I do know that adds up to all the M1 currencies in the world.
It's a lot.
Yeah, a lot.
Nikolai, you mentioned that, for example, with fiat currency, that there is some well, not fiat currency, but commodity-based currency with gold. There is some intrinsic value with gold, effectively, that balances the use of gold as a medium of exchange. Well, I mean, there's a lot of arguments bandied around saying, oh, well, Bitcoin, it doesn't have any intrinsic value. The point is, one, fiat currency doesn't have any intrinsic value, but other than the military power of that government. And the second point, I would say, there is, if you want, a hint of an intrinsic value with Bitcoin, which is that it's a payment system. Even if you don't, use Bitcoin as money, you can use it as a token to transfer value.
Just to follow up on that, essentially it's a protocol. It's an algorithm that spits out a unique serial number, and that serial number is recorded on a public ledger on the internet. So, for example, it can serve as a token of authenticity. If a Bitcoin is assigned to a university transcript or a painting, that serial number cannot be counterfeit. It cannot be double spent by someone who doesn't own it. So you can verify ownership of an item using that serial number. And so having that kind of cryptographically verified public ledger, that is what is very, very useful about this. The fact that currency can be sent to hold a place on that ledger is, and some people think that's incidental. So, there are lots of utilities, and we're still very early in the system.
Adam, I would fully agree with what you said. So precisely, the best way to describe Bitcoins for me is a kind of barter exchange system. So I plug in, I transfer some value into a temporary holder of the value, a token, and in order to do something else with it. I would fully agree with this. I just see that there are some limitations to do that, and there might be other ways to achieve this. And indeed, I mean, you're perfectly right. It's not a chance of history why hyperinflations happen exclusively with paper monies. This is precisely the point.
Because of fiat currency.
Because there is no alternative value. With any commodity money, you always have a floor. It cannot go down. The purchasing power of the money cannot go down indefinitely. But this can happen with paper currencies because they don't have any alternative use. Precisely.
Adam, last point, and then we must close. Go on.
Yeah, no, actually, I wanted, because obviously this is a payments conference, Dimitri is launching CryptoPay, which is, if you weren't, the equivalent of, PayPal payment processors, but for Bitcoin. And I think, this is a glowing example of the new types of startups that are emerging in this ecosystem, which maybe challenges in some respects the payments industry, but it'd be interesting to see the dynamic between cryptographic payments and the existing payments market that uses, Visa, MasterCard as rails for payments. So, Dimitri, maybe you can tell us a little bit about Bitcoin payments, how it works, just so that people understand a little bit about it.
Or technically, or just what you mean?
Yeah, and like an overview. If no one's probably paid in Bitcoin for shoes online.
Say they want to sell some service in Bitcoin, how would it work?
Well, it's pretty simple. It's like you make an account, like an e-wallet, when you store your Bitcoins, and you just send it over the internet, so your seller, they'll get these Bitcoins like straight away, and this can't be forged, this can't be reversed, there is no any risk of a fraud, so so the settlement is final, and it's pretty cheap. It costs almost nothing, and was a fact that $140 million were transferred in Bitcoins just from one address to another, and it cost less than 50p to make the settlement, and it took like a second. So that's the thing, it has lots of advantages for merchants at the moment, but still we need a regulatory framework to make the large merchants to adopt this technology in order to benefit. Like if these merchants get even a 1%, cut in their costs, it's going to be huge value for both customers and merchants. That's what we're trying to bring in.
And the money is received in GBP euro rather than holding it.
Our system provides the service that in the meantime, when the Bitcoin is not well adopted, you can pay in Bitcoins but get paid in GBP or euros. So we do the instant settlement, and the merchants are not, risk this volatility, because if they paid like 100 GBPs in Bitcoin, they're going to get hundreds in their bank account. That's basically what we do.
That has huge implications for the remittance market, which is, a $600 billion market. And in the poorest corridors, they charge about 25% of the payments, the hundreds of dollars or euros that migrants send home to their families. And in the poorest countries, that's about 40% of their GDP. So you can imagine, with the billions of people coming online in the next 10 years in developing countries, and the inability for us to put a brick and mortar bank in every corner of the world, how are these people going to engage in the global financial network? It's going to be through their mobile phones. It's going to be on the internet. And how do you include those? How do you enable global financial inclusion in this new world? And Bitcoin, certainly is an answer to that. It has the ability to reduce payments and increase the utility of money in our society. So.
Guys, I'm going to close the panel because we're running out of time. Thank you very much indeed to the panelists.